Welcome to PhillipCapital's Weekly Market Watch. The US dollar was under much pressure again after the APEC pledged over the weekend to maintain stimulus measures until there is durable economic growth. The declining dollar is giving the green light to investors to seek riskier assets other than the US currency. Today, we have Joseph Tan from Phillip Futures Forex Desk to speak with us about the impact of the falling dollar in the coming weeks ahead. So, Joseph, how is the US dollar likely to fare against the majors in the near months?
Ever since the introduction of quantitative easing by the Federal Reserve, we have seen gradual stabilizing of the US economy. However, this has resulted in a backlash of a depreciating US dollar since March. Due to the QE, there has been excess supply of US dollar, bringing it to newer lows against the rest of the majors. Data from the IMF shows that the central bank bought roughly 3 times the amount of euros in the second quarter compared to the US dollar. This could signal that the switching from US dollar as the reserve currency to euro is starting to take place and is no longer talk. Since March, dollar has weakened at least 70% against the euro and Aussie. And for sterling, it weakened only 46% as UK itself is going through the QE as well. Having said this, with central banks switching their reserves to an alternative currency like the euro, together with the increase in risk appetite, I think US dollar is likely to slide further against the rest of the majors in the coming year.
Should the US dollar continue to weaken, what will be the impact on carry trades?
In this environment of weakening US dollar, it is not practical for the Fed to hike interest, especially when the economy is not in a stage of growth. Should the Fed hike interest at this point, corporates will find borrowing costs too steep and it will restrict growth potential. Should the Fed keep the interest rate low for an extended period of time while the other central banks start to hike their overnight borrowing rate, attention will be switched to buying of higher yielding currencies and huge selling off of the dollar. When that happens, it will be even more difficult for the dollar to strengthen, as unwinding of such a massive carry trade may disrupt the economy. But at the same time, this could be a sign of recovery in the market when you see a steady upward trend in the carry trade currency pairs.
Would this signify more record prices for gold?
I personally think that gold will go higher until they find a better substitute for US dollar as the reserve currency. Most investors are looking to move away from holding US dollar for long term. Until an alternative currency or asset proves a good long-term investment, I think gold will continue to move higher as it is currently considered the safest asset to hold.
Thank you for your time. That's all the time we have for today. Join us again next week for more market updates.